Hello, everyone. Welcome to our webinar, Legal Talks, Tax and Immigration Matters for Foreigners, where we will discuss some of the most relevant issues for newcomers to Costa Rican shores. My name is Yvette Hernandez. I am an associate attorney at BLP in the beach town of Las Catalinas on our Pacific coast. BLP is a full-service law firm with offices in Central America and Spain, recognized as the leading law firm for doing business in Central America. Our office in Las Catalinas provides a full range of legal services, including real estate, hospitality, tax, immigration, and business law. I am joined today by my colleagues, Victoria Di Joaquino, who will provide insights on tax issues, and Marco Avellan, a legal specialist in immigration and global mobility.
Hello, everyone. Good morning. Thank you for joining us. We're going to begin with the tax matters. Okay, so some general considerations of the Costa Rican tax system. First of all, Costa Rica is based on the territoriality principle. That means that foreign source income should not be subject to taxation in Costa Rica. Only income source derived from Costa Rican sources would be taxable locally. So Costa Rican source income is defined as any income derived from assets located, investments made, and services provided in Costa Rican territory. Also, the capital gains tax, the sale of offshore assets by a Costa Rican holding company would not be subject to taxes in Costa Rica. Again, this is based on the territoriality principle. And then on the tax compliance side, a yearly informative return must be filed, and this return includes a detail of any holding company's patrimony. So even if you have assets abroad owned by a Costa Rican holding company, this must be declared on a yearly basis on this informative return. Currently, this return needs to be filed before April next year. Then we have a transfer tax of 1.5% on any transfer of real estate, a 13% VAT on the sale of goods and services at corporate tax rate of 30%. Like we were saying, legal entities tax, once a year, all Costa Rican legal entities are subject to a flat tax, which is for inactive companies or holding companies of about $120. The dividends tax, when we have dividends that are derived from local source, a 15% tax would apply. However, dividends received from abroad would not be subject to tax in Costa Rica. Now, what happens if you have a property owned by a Costa Rican holding company or even owned by you personally? Then if you decide to sell this property, you're going to be subject to the capital gains tax. What is defined as a capital gain is basically any variation in the taxpayer's patrimony. The general tax rate for the capital gains tax is 15%. However, for those assets that are owned before July 2019 by the taxpayer, can be subject to a 2.25% tax rate. And it's the taxpayer's choice to pay the 15% or the 2.25%. The difference between both rates is that the 15% rate would apply on the capital gain versus the 2.25% rate has a taxable base of transaction price. So you would have to do the numbers, and whichever is more beneficial for your purposes, it's going to be what you can pay. Then no capital gains tax would apply to capital contributions. This means that, for example, if you buy a lot and you're building your house, any expenses that are going to be made from this company for the building of the house can be used as a capital contribution or can be sourced from capital contributions to the company. And these contributions can be later returned to the shareholder without any tax implications as well. The only requirement is that the capital contribution must be duly registered in both legal and accounting books for the company. Now, capital gains and losses derived from assets that are related to the commercial activity of the taxpayer would be taxable with the general rate of 30%. This is the general corporate tax rate. And the difference is, for example, if you have a property that is a rental property, and this rental property is later being sold by the owner, then the capital gain derived from that sale could be subject to a 30% tax, depending on the regime that the taxpayer is registered. The capital gains tax and losses derived from assets not related to the commercial activity of the taxpayer would be taxed with a 15% tax. Like I was explaining before, if you own the asset before July 1st of 2019, on the first sale of that asset, the taxpayer will have the option of paying capital gains tax, applying a rate of the 2.25% of the transaction price or 50% of the gain derived from the transaction. And this is entirely up to the taxpayer to choose whether they pay the 15% tax or the 2.25% tax. Now, what happens when the seller is a non-resident? Usually assets are owned by a local company. However, we've had some cases in which the owner of the property is a non-resident, either individual or company. So for the transfer of immovable property, the acquirer must withhold a 2.5% of the transaction price. Otherwise, the public registry will not record the transfer if the tax is not paid. And this applies only when the seller of record is a non-resident. So this isn't the case where you sell the asset itself and not when you sell shares. In the case of shares or any other type of assets that are not subject to registration, the withholding would apply only if the buyer is a Costa Rican taxpayer, because there is no asset subject to registration. Then there is no penalty for the seller and the buyer not having the transfer registered. So this means that if both buyer and seller are non-residents, no tax should apply. However, recently we've seen some rulings from the tax authorities where they consider that even if both seller and buyer are non-domiciled, the tax still applies. And the seller would have the obligation of registering as a taxpayer in Costa Rica and paying the tax. However, this is not established by law. So it's entirely to the seller's decision if they decide to follow these new rulings by the tax authority. Okay, let's go to rental properties. Most non-residents in Costa Rica purchase a property and they visit a couple of weeks a year, and then the other weeks it's basically a rental property. So rental income has a specific income tax regime, which is the capital income tax. The capital income tax has a 15% rate. No deductible expenses are allowed, except for a flat 15% deduction on gross income. So this means that the effective tax rate is going to be 12.75% on gross income. Now, immovable capital income is defined as any leasing, subleasing, assignment, and exercise of rights on immovable property. If the taxpayer has at least one taxpayer, the owner of the property, if the taxpayer has at least one employee, the taxpayer can choose between two different regimes. Would be the general tax regime, which is the 30% corporate tax rate that allows all deductible expenses, and deductible expenses would be all necessary costs and expenses to produce taxable income. Or they can choose to remain in the 15% regime, the capital income tax regime. However, this requires to switch from one regime to the other. This would require an authorization from the tax authorities. And once you choose to switch the regime, you need to remain under that regime for a 5-year minimum period. So this means that you cannot elect yearly, on a yearly basis, if you pay capital income tax or corporate income tax. Now we're gonna follow with Moval on the immigration matters. Thank you very much.
Good morning, everyone. Thank you for joining us today in this webinar about immigration matters. My name is Mark Avellan. I'm the Immigration Director of the PLP at PLP. I manage the practice of immigration. Today, I'm going to talk to you about different types of residencies that we have and the most important facts that you need to know about how to apply for residency and what things you have to take into consideration when you apply for it. So I'm going to talk first about why you should have an immigration ID. And there are a couple of things that's very important to let you know that you need to know and need to apply when you apply for it. One is you can overstay in Costa Rica. As you know, currently, when you enter to Costa Rica, you usually receive 90 days to stay in the country. When you apply for residency, you can overstay. This means that you can go more than 90 days in Costa Rica, and you don't need to leave right at the time. A lot of people think that after they apply for residency, they need to leave and come back and get another 90 days. So one of the things here is the law allows you to overstay here, spend the time in Costa Rica, spend the time in the Carolinas. After you apply for residency, you don't need to leave. So that's very important. However, there's something that you need to know, which is important, and you need to take into consideration, and I'm talking about the Costa Rican driver's license and the use of the international driver's license. When we're talking about business visa or the tourist visa, which you will receive when you enter into Costa Rica, the standard 90 days, you can use your international driver's license during the valid of this visa. Okay, so if you receive 90 days, you will be able to drive in Costa Rica using your international driver's license for 90 days. However, at the moment you get to the 90 days, if you want to keep driving, you need to leave and come back. But something that is important for you to know is that if you don't want to drive, if you want just to live in the country, stay in your home, enjoy the beach, enjoy the climate, enjoying everything you have at Las Carolinas, you don't need to leave. All right, you can overstay. But if you want to drive, you need to leave and come back in order to use your international driver's license. Why you cannot get the Costa Rican driver's license? Because you need to become resident first. So once you become resident, you will be able to use and get the Costa Rican driver's license. All right. Now, another important thing, no travel. When you enter into the airport, you can use the citizen line. You don't need to use the tourist line. So this is one of the good things when you get to Costa Rica's airports. You can use, you get the residency card, you can use the line of the citizens. So that's something that a lot of people like. The other important thing is about the remote work. Once you get the residency, you cannot work for Costa Rican companies, but you can keep working for your companies abroad. So you don't need any permit to do so. Now, what's important is you need to keep the income abroad, all right? You need to be paid abroad. You can keep working in Costa Rica, but your service is going to be abroad, all right? Now, another important, very important thing, Social Security. A lot of people ask me if you need Social Security in Costa Rica if you already have a Social Security international insurance. However, yes, you need it. The Social Security is needed in Costa Rica, is by law. So there is no way we cannot get it. You will obtain the Social Security after the approval of the process. Okay, so once the process is approved, we will be able to help you to get the registration before Social Security. Now, so the payment of the Social Security will be different between categories. It's different, the amount that we're going to receive if you apply as investor, is different if you apply as a renter or as a pensioner. However, Social Security is mandatory, so we can no actually eliminate it at all. Now, another important thing, bank accounts. Is a lot easier to get bank accounts in Costa Rica when you become a resident. Okay, this helps a lot. This will help you a lot. The process is going to be more faster and more simple to get Costa Rican bank accounts. And another important thing that a lot of people think about it and like about this is that you can become permanent resident. So how you can become permanent resident? As soon as you get 3 years having the temporary residency, you will be able to change status to permanent residency. So how you get the 3 years, you first need to get a temporary residency. That's going to be valid for 2 years. Then you will renew it for another 2 years. And once we get to the 3rd year, we can apply for permanent residence. The difference between the permanent residency and the temporary residency is one main thing, which is free condition. Free condition means that you can perform work in Costa Rica individually. You can have your setup company. You can have your different scenario. You can give different business you can have, but you can do it after 3 years. Okay, after 3 years, you can do any job you want in the country. Okay. Now, we're going to talk about the type of categories. I'm going to focus first on investor residency regime. The investor residency regime is very popular. Is a lot of people apply for it. However, it's not the fastest way to get residency. It's a good way, but not the fastest. Main requirement for investor residency regime, you need to purchase a property with a value of $200,000 or more. Okay, that's the most common application. That doesn't mean that's the only option, but that's the most common. The second option will be if you purchase different assets like cars, like boats, helicopters. You can also apply if the value of those assets is more than $200,000. You can also have securities, or for example, you can have certain investments on banks, businesses, things that are similar to that amount of $200,000. Now, which is I do recommend. What I recommend is to apply using or based on real estate. Why? Because real estate is more common to apply at the immigration office. So the people at the immigration office doesn't need to think too much about how to resolve the case. Okay. What I recommend also, the recommendation is to have the property in the name of a company. And my recommendation is that company shares must be under your name. I know that a lot of you and a lot of people apply using the Costa Rican company and transfer the shares to an escrow agreement, or they transfer it to a trust agreement, or they just transfer to another company. Our recommendation in order to avoid delays on the approval of the process is if you got a company, put your shares under your name, all right? The minimum investment, again, $200,000. Now we have another category, which we call the golden visa. What's the problem with the golden visa? The problem with the golden visa right now is that we have the law, but we don't have the regulations. Without the regulations, we cannot apply for this golden visa yet. Once we get the regulations, it's going to be a couple of very interesting things that you can benefit of. One is investment of the property will be lower to $150,000, not 200,000, which is in the current law. So it goes 50,000 less. But the second thing is, this is very interesting, which is the benefit of the tax incentives. I don't want to go deep on tax incentives right now for two reasons. One, we don't have the regulations. We don't know how this is going to apply. And second, because as of today, there are no agreements between the immigration authority and the tax authority. So I don't want to give you information that is not accurate. So for now, it's going to be a very interesting project, but it's not ready yet. So a lot of people are talking about golden visas. Look, Marco, a lot of people ask me, can I apply? Because I want to bring my households and I want to bring 2 cars without paying taxes. Yes, it will be possible, but we don't have the regulations yet. So as soon as the regulations is ready, we can talk, we can have a meeting, talk to you and see how this is going to be working. And we can have also a conversation with Victoria, which is the tax expert, and see how this is going to be managed, okay? Now, the next category is the rentier. The rentier residency regime is very common too. It's not as deep as the investor, but it's very popular. The reason is because we need to prove an income of $2,500 a month for the next 2 years. How we can prove this? The normal application is by applying, demonstrating you have income abroad. What we usually recommend to clients to do is to request a certification of public accountant. The certification of public accountant that demonstrate that you have dividends, or for example, that you have a house in another country that you need to rent, and that rent or that lease will give you $2,500 monthly. Or for example, if you have an investment in a bank or capital stock that gives you interest over $2,500, it works. Or if you have a company where you have dividends that you can prove that you receive $2,500 a month. So the renter, that's the main requirement. That's the main proof that we need to file in order to get that. Now, we're going to see the next category, which is the pension residency regime. The pensioner residency regime, which is is popular, is the fastest, is the most easy way to apply for residency, because that pension residency regime just need one main requirement. That requirement is the pension letter. The pension letter has to say that you receive $1,000 monthly, and that is for life. I understand that pensions is for life, and that's the main concept of it. But however, our immigration authority requests that the letter says that. I understand that some letters, for example, if it comes from the United States, doesn't actually say that it's for life. But we can we already know what is the document we need in certain countries, so we can share an example of what we need in order to apply as a pensioner. What's the benefit between renter and pensioner? The benefit is that both of these categories, renter and pensioner, we can file them online, because we have a system now that allows us to file these applications online, and the process goes around 120 days, about 4 to 6 months in getting the approval in business days, okay? But if we apply as investor, which is the most popular, it probably takes us about a year and a half, okay? They're very slow, there are a lot of delays. However, have the other benefits that you can overstay in the country and things like that. What is important in any of these categories, doesn't matter which one you apply for, you will actually have, if you leave the country, you will always need the return ticket. This is a very common question, the return ticket. A lot of people like to come back and spend another 90 days to spend time here. They will always ask for the return ticket. Until you become a resident, which is at the moment that you receive the residency card, that's the moment you don't need a return ticket because you will be considered a resident of the country. Okay. Now, I want to talk about Nomad Visa Program. Nomad Visa Program is right now the hit in the country. Everyone is talking about the Nomad Visa Program. Why is so famous the Nomad Visa Program in Costa Rica, which is different to another countries, for example, like Panama, Bahamas, or you want to talk about Portugal? You know, the difference is we create a program. There is a fast way to get the approval. Okay, the Nomad Visa Program is actually a process that we want to invite you to do it and come to live in Costa Rica. The only situation that is very important to take into consideration is the Nomad Visa Program is a special category. It's for a certain period of time, in this case, 12 months. Okay, you can stay here for 12 months. You can renew it one time for another 12 months. But the important thing here is that it's a program that you can have if you don't want to have a residency, you don't want to live here permanently, but you want to spend some time in the country, enjoy Costa Rica, enjoy the beach, enjoy Los Catalinas, enjoy the Guanacaste, on all the area around. You can apply for the Nomad Visa Program, and we need to prove that you receive an income of $3,000 a month if you're coming alone, or $4,000 if you're coming with the family. How we prove this? We can prove this with bank statements, okay, from the last 12 months. If the bank statements for the last 12 months demonstrate that you have this income, you can apply for this kind of category. Now, important for the Nomad Visa Program, there is a very common question. Can I work in Costa Rica for Costa Rican companies? The answer is no. Nomad Visa Program does not allow that you can work for local companies. You can do your job for companies abroad, but not for Costa Rican companies. And the requirements are simple for the main applicant: valid passport and medical insurance for $50,000 that covers for the year, and the dependents, minors, birth certificate, the spouse, marriage certificate. In any of these documents, we don't need the apostille. Okay, the apostille is the certification of the signature of the public officer who issues the document. Could be the police record, the birth certificate, and the marriage certificate. In the case of the Nomad Visa Program, we don't need anything apostille. So this is a very resume of what is the immigration in Costa Rica, but we can go deep if you have a case specifically. We can gather, we can have a meeting, could be in the Catalinas, we can have a phone call, and we can review all these matters. Thank you.
Thank you, Victoria, and thank you, Marco, for sharing this valuable information. Now I'm going to explain a little bit about the company obligations that each legal entity has in Costa Rica. On January, there's the legal tax entities tax. In January, there's also the filing and payment of luxury homes tax. March, you have to comply with the income tax return and annual shareholders meeting. And also the payment for education and culture stamp. On April, inactive companies informative return. And there are two annual obligations. One is the resident agent, and the other one is the Registry of Transparency and Final Beneficiaries. Please note that these dates are subject to change by Costa Rican government for our next year on 2023. Thank you so much for joining us in this webinar. We truly appreciate your time. And please, and if you have any query regarding or any comments regarding our webinar, contact us, sending us email to my email address, which is ihernandez@blplegal.com.